today, and I just want to thank everybody for taking the time. Really had a good response to the fact that we're doing this, offering people who are experts on this. Let me start by acknowledging, we know these are challenging times. We know that small businesses have faced these just unbelievable challenges. What I've been doing is just spending my time listening to our small business owners and operators, learning what I can so I can go back out to Washington and do what we can to be of help. We know that you need the tools to keep your foundation strong. We know that grants are what can help you keep your doors open, keep your payroll going. We know that low interest or even forgivable loans are something that is absolutely necessary. And you know, we have what I've been doing on as far as being a member of Congress is passing legislation that has been helpful, whether it's the Families First Coronavirus Response Act, the CARES Act, the Paycheck Protection Program, Healthcare Enhancement Act, the Economic Injury Disaster Loan. You guys know all these things. These are like common terms now, making sure that we've got money for the Small Business Administration. But even all of this that we've passed, it has not been enough. That's why we've had to keep going back. I hop planes. I've probably been on, I don't know, close to 10, 12 flights back out to Washington during this coronavirus. The part right now that we're waiting to get taken care of, and we know there's a sense of urgency around this, is around the HEROES Act. We passed that. It was 105 days ago today that we passed that, but that offers improvements to the Paycheck Protection Program. It provides more money for emergency grants through the EIDL program. It boosts the Small Business Administration microloan program. But unfortunately, we've sent that over to the Senate side, and they have not yet offered anything that we can sit down and have a real compromise on. So look, we know you're hungry for information, so I want to get right into this. So who we have with us today, we have Daniel Laughlin, who's the Managing Director of the Specialty Tax Practice at FGMK out of Chicago. We have Michael Bass, who's a partner out of RSM US, based in Peoria. He's based in Peoria. We have David Schroeder, the Senior VP of Federal Relations for the Community Banking Association of Illinois. And we have my friend, Bo Steiner, with the Illinois, with the state, or the SBA. He's the Illinois State Director, District Director. Bo has been absolutely great. He's been on so many of these calls with us. So I want to make sure that I'm thanking all of them for taking the time. And then I want to do a special shout out for the American Institute of Certified Public Accountants. They've been absolutely instrumental in putting this webinar together, as well as the Illinois State CPA Society for recruiting our volunteer CPAs. So let me start. Each of them will give kind of brief opening remarks, and we're going to get to Q&A as soon as we can, because we know there are a lot. So I'm going to start with Bo Steiner, again, the Illinois State District Director of the Small Business Administration. Bo?
Thank you, Congresswoman Bustos. I really appreciate the opportunity to be here today. As the Congresswoman mentioned, my name is Bo Steiner. I'm the District Director for the Small Business Administration's Illinois District. So me and my team, we're responsible for delivery of SBA programs across the state with the goal of helping businesses start, grow, expand, and recover. Normally that revolves around conventional SBA lending, business counseling, government contracting. However, at the end of March, we really pivoted to support the many programs that are helping businesses weather this pandemic storm, to include the Paycheck Protection Program, Economic Injury Disaster Loan Program, the advance grants, debt relief, a whole host of different resources to help you as small business owners really, navigate these incredibly challenging times. So as we move forward, we will continue to be that point of information to make sure that you've got what you need in order to navigate the existing programs and anything else that may come up in the future, to help you as you look at your working capital needs, as you look at your business advising needs, just to help you come out of this in a position where you can continue your business, where you can continue to grow, and you're in a stronger position. So again, really appreciate the opportunity to be here, and look forward to answering questions.
All right, thank you, Bo. I'm going to turn it over now to David Schroeder, Senior VP of Federal Relations at the Community Banking Association of Illinois. David.
Good morning, Congresswoman Bustos and everyone on this call. I appreciate the opportunity to join you this morning. I have the pleasure of representing 300 Illinois community banks that reside in every corner of the state of Illinois. When the Paycheck Protection Program was announced, we polled our members, and we're happy to learn that over 90% of them intended to and ultimately did participate in this very successful program. Some of our members did several handfuls of PPP loans, while others did many hundreds. It was interesting for us to hear from our members that they were making PPP loans not only to their customers, but also to non-customers, many of whom were frustrated and trying to work with the largest banks. In fact, many of our members reported that 20, 30, even 40% or more of their PPP loans were made to non-customers. According to SBA data analysis, community banks were the predominant PPP lenders, serving 57.5% of all PPP recipients. This number is really impressive when you consider that community banks have less than 20% of the nation's banking assets and yet provided and served 57.5% of all PPP recipients. Also, community banks provided the most loans to minority-owned, women-owned, and veteran-owned small businesses. And community banks made 98.2% of all loans in low or economically distressed counties. Overall, we're delighted to say that community banks work closely as well and under very difficult circumstances well together in the rollout of phase 1 and phase 2. Now that these loan proceeds are in the hands of small businesses and are beginning to be used for their intended purposes, we come to the promised forgiveness of that debt. We can assure you that community banks will work as diligently on loan forgiveness as they did in originating the PPP loans themselves. Within the last couple of weeks, we've had a number of conversations with our members about where they are right now in the forgiveness process. I can report honestly that there's really no consensus. One member I spoke to that did 200 plus PPP loans is quote unquote holding off for now on forgiveness applications. Another member that did 70 plus loans has processed one application for forgiveness kind of as a test and reports the process. And Bo, you'll enjoy hearing this, not too bad. Another one that also did 70 plus loans has started the process and reports it's smooth so far. I talked to one member last week who reported processing 2/3 of the loans that they made. But I'm not aware of any of our members right now, honestly, that have processed forgiveness on all their loans. Obviously, everyone is interested in learning the decision regarding automatic forgiveness and at what level. I can tell you that our association strongly supports automatic forgiveness, and we support what appears to be a bipartisan and compromise threshold for loans under $150,000. At this level of 150, about 85% of the number of PPP loans will qualify for forgiveness, but only about 25% of the loan dollars. And we really believe this threshold provides maximum relief to small businesses and community banks while still allowing for aggressive due diligence to be exercised during the forgiveness process. We truly hope automatic forgiveness is part of the next relief package passed by Congress. In summary, I'm proud of the community bank response to the PPP and that Illinois banks made many tens of thousands of loans to help Illinois small businesses survive and recover from the crisis. Thank you very much, Congresswoman, for having me on this call, and I will enjoy answering any questions I can.
Very good. Thank you, David. Okay, now we're going to turn over to Michael Bass, partner at RSM US in Peoria, and Daniel Laughlin, managing director of specialty tax practice at FGMK in Chicago. So if you guys can make a couple of opening remarks, then we're going to open it up for questions.
You want to start, Daniel, and I'll jump in?
Sure. Good morning. I'm Dan Laughlin from FGMK. I appreciate the opportunity from Congresswoman Bustos and the AICPA to be here this morning. My firm, FGMK, we are headquartered in Bannockburn, Illinois, with an office in Chicago. A lot of our clients we focus on small, mid-sized businesses. So a lot of our clients are you, those who are out there this morning. The questions that we hope to answer this morning are the same ones we've been answering for our clients, and so I look forward to the discussion.
Thank you, Dan. Mike.
Yes, thank you, Congresswoman Bustos. Appreciate the opportunity. Mike Bass, partner at RSM. I manage our local market group here in Central Illinois. 4 offices in the Peoria, Champaign, Galesburg, Springfield area. Work with a lot of business owners, not-for-profit clients, have helped them navigate the waters of the PPP loan, not only working with them and their banks early on in the process as far as making sure things were done timely, got the right information to them, but now obviously helping them through kind of forgiveness, the timing of the forgiveness, what that's going to look like, when to handle that. And then especially as we're rolling through here third quarter and year end, getting some of those answers around the expenses, the income as we move into year end planning and things of that nature. So again, appreciate the opportunity and look forward to answering as many questions as I can.
All right, very good. Dan and Mike, thank you very much. Well, let's get right into it. I don't want to waste any time. So I'm going to turn this over to Kate Jennings. She is my district director. She will serve as the moderator as questions come up. I think we got 40 some questions in advance of this. So Kate, I'll turn it over to you and we'll get right going with the questions and the answers.
Thanks, Congresswoman. I need to do a little disclaimer first. I need to make it clear that members in their official capacity and using official resources cannot solicit CPA advice nor provide a platform to advertise CPA firms. Members and staff cannot facilitate communications directly between a business owner and a CPA firm, but a business owner is free to contact a CPA firm on their own if they choose to, and staff can ask CPA questions on behalf of business owners. Our CPA participants are here volunteering their time today as a way to give back to their community during a difficult time. So we thank them and we'll get started with the questions. Number 1, what are the loan repayment obligations for nonprofits who received both PPP and EIDL loans?
So this is Mike Bass. I can take that one. So when we think about the PPP monies, there was really 2 tranches that came out. There was loans that were issued prior to June 5th, and then there was loans issued after June 5th. So if you received PPP money prior to June 5th, any of that PPP money that's not going to be forgiven, you would have a 2-year payback at a 1% interest. After the if you had received monies after June 5th, it's going to be the same 1%, but it would be over a 5-year period. Obviously, you can work with banks to see if those terms can be less or not, but those are the general criteria as far as the terms and the repayments on those.
And then I'll hop in on the EIDL loans. Those are basically based on the terms that you agreed to with the SBA. So the Economic Injury Disaster Loan Program is a direct loan program with SBA. Typically, those are going to be 30-year terms at 2.75%. But yeah, you would be obligated to repay over that period of time. There is no forgiveness for the EIDL loan. That the forgiveness is only available on the PPP.
Oh, if you don't mind, just to add, Lachlan, you just expound upon that, because EIDL's been a conversation point for a lot of clients I've spoken with, and trying to help them understand that versus the PPP. We're really viewing the EIDL, you have probably a wider breadth of expenses you may be able to cover with that, but you're also really looking at where you've actually suffered the loss to establish the loss versus doing more PPP, maybe being a little bit more prospective and thought, and the costs are going to be coming. EIDL looking at, these are the costs we've suffered as a result of the pandemic.
Yeah, sure. So the EIDL is really a working capital loan. So the intent is that you use it for all those expenses that you normally would incur in the normal conduct of your business. So that can be a lot of the things that you would pay with the PPP. So that's payroll expenses, rent, mortgage interest, utilities, those sorts of things, but also other accounts payable to include inventory. Maybe you already had some accounts payable that you had incurred, those sorts of things. So it's very much a general loan program for a wide range of use. Now, there are some things that you can't use it for. It's kind of a laundry list that I won't get into, but I think when you're thinking about kind of differentiating the two, it's really what we've asked business owners, or what we've been advised to, direct business owners, is to try and not use both of those, the PPP and the EIDL for the same purposes at the same time. So that's really what you want to bear in mind as you go through the process.
Appreciate that.
Okay, Kate, next question.
When will there be a form available to complete for forgiveness?
I'm happy to.
Will you repeat that? When will there be a form of what?
A form available to complete for forgiveness.
Okay.
And this is Dan Loft, I'm happy to answer that. The forms are there now. If you go on to Treasury, they'll take you to a page actually at the top. There are 2 forms out there now. There's the easy form, which is the more streamlined. You have to hit certain criteria, which we can talk about. And then the regular app form is out there. I think the key element that our clients are facing is whether the banks are accepting that form yet to really start the process. Because you go with the lender review, then you'll go with the SP review following that. Smaller banks have started to open. For example, I know a bank that we worked with is Wintrust. They're open. The bigger banks who have the bigger portals that are looking to really, within the portal context itself, help facilitate the completion of the application, they have not opened yet. And so that's the biggest roadblock, but the application is out there.
Yeah, and I would add here in Central Illinois, you know, we've heard from a handful of banks where right now, while the forms are there, they're really looking to process those applications that are above that 150 number right now, simply because we just don't know if there's going to be a blanket forgiveness for those loans under 150. So a lot of the community banks here locally are really just trying to get those applications above the 150 target right now processed through. And then depending on what we hear, they'll go down to those lower amount of loans.
This is David Schroeder. I would definitely suggest that the small businesses contact their bank and find out where they are in that process. Open communication back and forth is always really good to do.
Last thing I would just mention is I did put a link in the chat box on the location of where you can also find the forgiveness forms and the instructions. They really bring a lot of clarity to what you need to do as you go through the forgiveness process in its current format. It's a form 3508 and 3508 easy. So it's, you know, that location is going to have all the information you need about the program. The other thing that you want to consider is, as you're looking at your loan forgiveness application, and I'm not an accountant, but I'm sure my colleagues here on the panel here would agree with this. Certain aspects of forgiveness and some of the safe harbors do depend on when you submit your application, or can depend on when you submit your application for forgiveness. So as you're looking at timing, you know, you could certainly wait because you have a very long time within which to apply for forgiveness before you will actually start to have to make principal and interest payments on your loan. But you may be, because of your business circumstances, it may make sense for you to apply right now as opposed to waiting until later in the timeline. So just offering that for perspective. Now, once you submit your application to the lender, they have 60 days to process that and put it into the portal and get it to SBA. So, you know, even if there maybe is some legislative changes, there'll be probably a time lag in there unless the bank's really proactive to process your loan, your application for forgiveness.
Okay, Kate, next question.
Yep. Is it true that the IRS is not allowing businesses to deduct expenses that were paid for by a forgiven PPP loan?
As of today, that's correct. Right now, the expenses would not be deductible. And as of right now, the income from the monies received would not be taxable. So within the code, not to get too technical, but if you've got forgiveness of income, typically that's going to become income. But the way the PPP loan is set up right now is you would not have the income, nor would you have the expenses as a deduction. So I would caution everybody to be careful when you're looking at your bottom line as far as your income and taxable income, because what you're seeing on those financial statements may not necessarily be what your taxable income is going to be. So I would recommend that you reach out to your providers and walk through that until we get other guidance. We just don't know if that's going to change. We're hoping, but we as of today, we have not heard anything around that.
And just to continue with that, Mike, because I think you're hitting on this is an issue that's a big conversation, right, with our client. I believe it's Senator John Cornyn has a bill out there that would address this, and I know that Congress is still talking about that. But what we're also now talking with our clients is trying to determine how is this going to affect tax returns should we not get deductibility that we all hope for. In the stance is how is this going to affect the tax return? When are these expenses not deductible in the sense that if you are sitting here in 2020 submitting your application for forgiveness, but don't actually receive forgiveness until 2021, or these expenses are still a loan at the end of 2020, deductible in the 2020 tax return is how we're taking a look at it. But how is it going to be recaptured in 21? Is it going to require a series of amended tax returns? Is there going to be a 41 adjustment? Should they take a look at the accounting method change? I mean, these are things that the government will have to continue to talk about if we do not get the deductibility. But as Mike hits upon, this is very important to talk with your tax provider right now to start to map this out.
Yeah, and one other comment to that, Daniel, is if you have a pass-through entity, so if you're a partnership, if you're a S corporation, obviously you're going to, we've got third quarter, fourth quarter estimates that are going to be coming up, and it's going to be very important that you guys really get a handle on what that projected income is going to look like, because that will or could have an impact on what your third and fourth quarter estimates look like. And you want to be careful because you don't want to run into any sort of underpayment penalties or anything else down the road. So I strongly encourage everybody to reach out and have those conversations.
Thank you. Can you explain what are the FTE calculations?
The only reason I smile is I know that this has become one of the key sticking points as far as trying to determine what is going on within the application itself. Ultimately, FTE, full-time equivalent, what you're looking at is your employees working on a 40-hour or more work week being determined to be a full-time employee. What you're trying to take a look at through the application process is whether you maintained your full-time equivalent headcount during the course of the covered period, that being the period in which you're utilizing the loan, as opposed to a prior period, which is, as I call it, the borrower's choice is what that prior period is. You're really taking a look at either June or February 15th to June 30th of 2019, taking a look at what your average full-time equivalents were during that period, or January 1 to February 29th of 2020. You're going to want to select the denominator. This becomes a denominator in your FTE reduction quotient, which is ultimately a percentage reducing your forgiveness. If your FTE average for the period of the loan, that being the numerator, drops below your borrower's choice denominator, you're going to have a reduction in your forgiveness amount. But there are also some safe harbors in the rules, as well as exceptions that allowing you can think of it as add back to your numerator, that are there to assist you if you can meet them. It is a bit of a maze-like computation. The instructions lay it out, but there are a lot of moving parts.
Is there a criteria for whether you choose the covered period for PPP or the alternate covered period?
I'm happy to answer this again. It's really, if you have a frequency of payroll of bi-weekly or more frequent payroll, it's something to take a look at in order to line up your payroll dates with the period of your utilizing the loan. So if your loan was dispersed on a Tuesday, but it makes more sense for you to start your quote unquote alternative covered period on the following Monday, because that's when your next payroll runs begins. That is an opportunity for you if you're paying your employees on a bi-weekly or more frequent basis.
Yeah, I think it would be important to look at both of those periods and run your numbers accordingly to see what's going to be the most beneficial to you. As far as a criteria or requirements, I don't necessarily think there's any specific requirements, but I think it's important that you run those numbers under both the alternative as well as the other period.
Yeah, Mike's hitting on a great point, because the SBA gave us some flexibility with paid and incurred language. Mm-hmm. So you can have payrolls actually hitting at the very beginning of your covered period, for which you did not incur those expenses during your covered period. They were previously incurred, but they're actually getting paid out. So going back to that Tuesday example, if your payroll pays out on that Friday after your loan was dispersed on that Tuesday, there's a lot of costs that were incurred prior to that disbursement that you can actually qualify and count towards forgiveness because they're paid out on that Friday. So that language gives you some flexibility to look at both what you call your standard covered and your alternative cover to see where you can include the most costs.
Right. Yep, great point.
All right, Kate, next question.
Yep. Who will determine how much of the loan will be forgiven?
I think it's a three-tier process. First of all, it's going to be you as business owners, how the business has been going, because that's obviously when you get back to your FTE, how much you've spent. You're going to start there with your expected forgiveness amount. That's going to be what you've spent and are trying to spend probably nearly every dollar you have in the loan. If you maintain your head count, maintain your pay, you're going to be able to get probably close to, if not 100% of your expected forgiveness amount. Then it goes to the lender, and the lender is going to review that application that you submit, and they are going to make a determination, and they are going to submit their determination onto the SBA. The bank, the lender, has 60 days, and then the SBA is going to have an additional 90 to work through that process. So you could be looking at 150 days from the day that you submit your application to the lender. But it's going to start with you and your team reviewing the application, then the lender reviewing it, and then the lender will submit on to the SBA for final determination.
Yep.
Are we allowed to apply for forgiveness earlier than the 24-week period if we spent the entire PPP loan earlier than 24 weeks, or do we have to wait for the entire period in order to apply?
Yeah, I'm not aware of any requirements. I mean, if you're pretty confident that you've spent all that money on payroll, you can certainly apply for that forgiveness. Again, depending on the bank and that, they may not process that right away. But yeah, I've had a lot of conversations with clients where, we basically know where they're at, so there's no reason to wait.
One thing I would like to add here, just provided some feedback to the SBA and Bo, and I'm sure they're aware of this. But the question we routinely get now is for those who are pushing out to the 24-week covered period, just the way everything is defined and the rules are set. You have 8 weeks or 24 weeks. It's been defined as that, and that's by statute as well. The thought being, though, is if I'm a borrower who's spent all their money in 15 weeks, let's say,
Yep.
and I submit my application on that 15th week, how is the lender, the SBA, how's the government going to view? Am I done? Am I truly done with my defined covered period? Or is there the opportunity for the SBA, somebody to come back and look at, hey, I've submitted my application in week 15, but technically underneath law, there's still 9 weeks left in my covered period. I've spent all the money, I've abided by the guidelines, and now I'm using that money in the 15 weeks. But now I have to start making some real business decisions because the money has been spent. I may now have to make some headcount reductions because I don't have any more government grant money to spend. Am I still beholden to the 24-week covered period, or are we going to look at it as because the money's been spent and utilized in 15 weeks it is, business decisions can be made now?
Yeah. So my understanding is that the way I understand it right now is that once you submit your application for forgiveness, that's kind of like your stop point, right? However, there is some considerations that they've discussed and probably need further clarification where if, let's say you had a salary or hourly wage reduction, there is some discussion that you would have to extend that through the 24-week period. So there is some, I think, still additional clarification that needs to happen relative what that looks like and that headcount reduction. I mean, the one thing that, you do see is that FTE safe harbor too, it reflects the earlier of, the date of application or that December 31st date, which means that if you increase your headcount back up to your basically February 15th pay period FTE level, then you are at a safe harbor where you would not have any kind of FTE reduction. But again, I think it's a good point, probably needs a deeper dive for sure. I'll pass that on.
Appreciate it. Thank you.
What documentation do sole proprietors need to provide to prove the funds were used for payroll, utilities, etc.?
So from the standpoint of sole proprietor and the payroll expenses, really all they have to provide is their 2019 Form 1040 Schedule C, which shows the net profit. That's been defined as the criteria very early on in the interim final rules for payroll costs. Now, for those other costs that were in place, so utilities, rent, those sorts of things that were in place prior to February 15th, because that's kind of the benchmark that you have to meet, then you would need to have documentation showing your invoices for those said expenses, as well as potentially being able to provide proof that those expenses, so it could be a lease agreement, it could be bills for your utilities prior to that February 15th date, just demonstrating that those were already in place at that time. But those would be the kind of examples that you would have. Now you're going to want to work with your lender as well to see what they're going to want to see as far as that documentation. But very broadly, those are the kinds of things that you're going to have to provide.
And Bo, if they obviously for those sole proprietors, if they do have employees or other entities, the quarterly payroll reports would help as well. Obviously, that's going to show your compensation, number of employees, things of that nature. So I think it's important to make sure you've got those gathered as well.
Yeah, for sure. And I guess differentiating, right? I was thinking sole proprietors in like the, I'm self-employed kind of, it's just me.
Right.
But yeah, if you do have employees, and those are W-2 employees, those aren't 1099 employees.
Right.
You need to be able to provide those payroll reports and like your, 941, IRS form 941s, and any kind of unemployment insurance. So I think it's a UI 940 or 34. Yeah.
Yeah.
So, you're going to need to have all those documents as well, just to demonstrate your payroll costs that you've got.
Right.
After you file for forgiveness, can you give us an estimate on how long the process will take before you'd receive a determination?
Sure. So I'll hop on that. So once you've submitted your application for forgiveness, the lender has 60 days within which to process that, make their determination, and then get it to SBA for the final review. Once it's in SBA's hands, we have an additional 90 days. So that's 150 days total would be the maximum amount of time in order to receive a final decision and have those funds remitted to the bank on your behalf to pay off whatever the amount of forgiveness will be in that particular case. So that's the time period. One thing I did want to, I'm not sure if we get the question or not, but one thing you need to know is if you did receive an economic injury disaster loan grant, so that EIDL grant of up to $10,000, which was part of the CARES Act, the amount of that EIDL grant, when SBA reviews, we'll review it for the forgiven amount for the PPP. We'll check to see if you've received an EIDL grant, and we'll subtract the amount of the EIDL grant out of the amount of forgiveness. So I always use the example, if you've got a $50,000 PPP, you received a $5,000 EIDL grant, you would have received 100% forgiveness, so 50,000. We're going to subtract out that 5,000 from that 50,000 amount of forgiveness. So you'll have $45,000 of that PPP loan paid off, and the remaining 5,000 will term over the 2 or the 5 years, depending on when you received that PPP.
Can you include new hires if it brings your employee cost up to old employee cost?
Yeah. I mean, so the process is really agnostic, I think, to who the employee is. It's more looking at the FTE or the FTE levels with the employees that you either had on board and continue to work for you, or new employees that you brought on. But I'll defer to our accounting people here as well, but that's my understanding.
But I'd agree. I think for the most part, the application is agnostic as to the individual, with the exception of when you're taking a look at the pay reduction of a specific employee. So that's the one instance where you're going to look at the specific employees, whether you've reduced their pay by more than 25% when you're comparing the covered period to Q1 of 2020.
Yep, agreed.
Can you address repayment and forgiveness for a seasonal business?
I think for the most part, the rules are standard, with the exception of the fact that with seasonal businesses, there are some different measurement periods that can be utilized when you're taking a look at things like FTE headcount. Going back to that denominator, there is an exception for utilizing any 12 consecutive weeks that are within I believe it's like a May to October period, if I recall correctly. So the rules are fairly standard for all borrowers, but there are some exceptions with regards to application periods when you're looking at certain measurements.
Will the loans, if forgiven, be considered taxable income?
As of right now, no. So right now, as we talked about a little bit earlier, the income wouldn't be taxable, excuse me, and the expenses would not be deductible.
Can you go into more depth about the safe harbor regarding the easy form? What qualifies for the safe harbor? Could you maybe give an example?
I think there's a couple of key elements. There's about 3 different classes of borrower that can utilize the easy form. One would be the self-employed individual without employees is going to be able to utilize easy, no question. Then you have to take a look at circumstances as to whether you've maintained headcount. This is getting back to, and this is an interesting differential that was made when you're taking a look at the easy application versus the rest of the FTE rules. When you're looking at FTE rules, it's all talking about average full-time equivalents. When you're looking at the easy form as to whether you are hitting the criteria to utilize it, you're actually looking at number of employees. And you're looking at number of employees from January 1 to the end of your cover period. If you can answer that you have not reduced the number of your employees since January 1 to the end of your cover period, and have not reduced any employees' pay, be it salary or hourly wage, by more than 25%, again, you can utilize easy form. The third group would be where you've able to argue that your business has been affected since February 15th due to certain circumstances regarding the pandemic and government regulations, not being able to operate at the same level of business. I think most who are going to be looking to utilize easy form, aside from the self-employed, are going to be looking at that number 2, that second group. And again, you're going to be having to answer the number of employees has been consistent, as opposed to looking at average FTE numbers.
Yeah, and I would just say, keep in mind when you're going through those rules, it's an and not an or. So you have to be able to meet all of the criteria. So just be careful when you read that it's an and not an or.
The regulations for owner compensation have appeared to change to include total owner compensation from all companies. So if a business owner has 3 S corporations, each having a PPP loan and each having the owner on the payroll, the owner's comp limitation is not separate for each company, correct?
That's correct. You're going to have to look at an aggregate. So you're going back to the cash compensation component of that owner employee. If it's 8 weeks, 15,385, you're looking at that number across the 3 businesses, 20,833 if you're going to 24 weeks. So there is a modification to how you need to interpret that on the back end now, going through forgiveness versus what you may have thought of it to be at the beginning when you were applying for the loan.
The timeline to spend funds was changed from 8 weeks to the date 12/31/2020. However, can you pick any date in the middle to meet the FTE requirement and dollars spent for each category?
I think the first thing for all borrowers to be aware of is that your covered period begins on the date that the loan is disbursed, hits your account. With the exception, again, as Mike and I have talked about, that alternative covered payroll period, which you can utilize if you, again, are a borrower who has a biweekly or more frequent payroll. And just so you know that that is only applicable to the payroll cost. The non-payroll cost still utilize the disbursement date. So the disbursement date, with the exception of the alternative covered payroll, is the date the period begins. And then you select whether you, again, if you are borrower before June 5th, you can select 8 or 24 weeks. But then as we were talking about before with Bo, when you file that application, that appears to be the interpretation right now is really ending your covered period, with, again, the exception that you need to be aware of that employee who you reduced their pay by more than 25%. You need to be cognizant of that and take that into account for the full 24 weeks, even if you apply before the end of that 24 weeks with regard to the application.
Yeah, and depending on where you are in your hiring, as far as getting back into work and getting employees back, you could certainly expend all of your funds prior to the end of that 24-week period. So.
Yeah, and Mike, I think probably like you, a lot of our clients now are into that analysis.
Yep.
And for a lot of our clients, it's going to make sense to extend past 8 weeks because, as Mike's hitting upon, you're probably going to be able to utilize loans unless you're one of those impacted businesses who's really had this, the fits and starts of this pandemic, with the ability to utilize your payroll. And actually, what some of that flexibility is allowing too is being able to utilize it really on your standard cash compensation, as opposed to having to be concerned with utilizing benefit costs. We've had some applicants and borrowers who've been able to really just look straight at their payroll, which has facilitated some of the process in the application because obtaining those payroll reports documentation is a lot easier than some of the other documentation you would need to submit some of the other payroll costs. So if you're able to utilize really your cash compensation element of it, extending out to 24 weeks is going to be beneficial as long as you're not running into the FTE reduction issue.
Yeah, and the 24 weeks was the change from the 8 to the 24 was huge because obviously when the pandemic hit and when PPP monies came available, a lot of people, as we talked about, went out and got them, spent the money within the 8-week period, but businesses were not open back up depending on where we were as far as what phase we were in. So now we had clients that had money exhausted, they weren't back operational. Therefore, they had no revenue. So when they did open back up, obviously trying to get, revenue and then trying to get people paid, it became very difficult. So it was nice that they extended that 24-week period, let my clients, at least in my case, hang on to some of that money until they were actually back working to get people back in the office to get them paid. So.
Here's another one. What items can be forgiven?
Yeah, so I think as we talked a little bit earlier, you're looking at payroll cost, so compensation, the employer retirement contributions, health and dental insurance, rent, utilities. I know something just came out regarding rent to a related party. So you got to be careful there because that's going to be limited to the mortgage interest on the property owned by the lessor, I believe. So those are your main items that are forgiven.
Just to expand upon that, Mike just hit upon an important element, that ruling that came out on Monday with regard to the self-rental. You're going to have to take a look at that related party, and the way that the SBA has interpreted related party is really any ownership in common. So it's not even necessarily a threshold for those who are used to taking a look at the related party issues underneath the tax code.
Right.
And what you need to be cognizant of is that if there's no mortgage remaining on the property, if that property was paid off years ago, that's going to be an issue with you not being able to really obtain any benefit with regard to forgivable costs, because that rent now is not going to cover any mortgage interest payments because there's no mortgage anymore. So you really need to take a look at that if you're expecting to utilize the loan for rent.
And I would say, I got a handful of phone calls around that when that came out, and the comment that I made was, well, as long as you're meeting that compensation threshold, you're going to be okay. It's where companies really aren't meeting. Keep in mind, the PPP money was really to supplement payroll, right? At the end of the day, that's what the true benefit of what the PPP monies were for. So as long as you were utilizing that money to cover, the 60% or more of your payroll, while this change is important to note and realize, as long as you were using it for that payroll, you're going to be okay.
What should I do if I'm only asking for forgiveness on part of my loan?
I think the application takes that into account with regard to, you'll be applying for the amount that you spent in a covered period and seeking forgiveness. You just need to be aware of the fact that what you retain, you're going to be retaining at a 1% loan, with the understanding that you're hopeful that for what you applied will be forgiven, and the loan itself, that portion, the principal as well as the interest related to it, would be forgiven with no payback.
Okay. Can you explain this option more? The borrower was unable to operate between February 15th, 2020 and the end of the covered period at the same level of business activity as before February 15th, 2020, due to compliance with requirements established or guidance issued between March 1, 2020 and December 31, 2020 by the Secretary of Health and Human Services, the directors of the Centers for Disease Control and Prevention, or the Occupational Safety and Health Administration, related to the maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirement related to COVID-19? And would any of the Illinois state restrictions count toward the above?
So just to say, this can be facts and circumstances driven, and this can be documentation, being able to make the argument for yourself. To the second point, I think that's a very great point you made there, Kate, as far as that question. And yes, you can take a look at local and state rules that are being played off of, really evolving from the CDC and the Department of Health and Human Services that was actually addressed in SBA guidance, and is very similar to the guidance that the IRS has put out with regards to the employee retention credit. We're able to take a look at local governance that are feeding off the federal government guidelines.
Are there any additional funds or grants available as an alternative or addition to PPP and EIDL at this point?
So there are some additional grants that are funded through the CARES Act, but being issued through the state that you might want to look at. Those are the business interruption grants, or big grants is what they're calling them, which are $10,000 to $20,000 grant opportunities. They had a first tranche that already came out. There is a second tranche of funds that they're going to be issuing, which I think is going to be focused on central and southern Illinois. To find out more information, I would recommend you go to the Illinois Department of Commerce and Economic Opportunity, as they will have the latest and greatest on the availability of those grants. Now, that's not to say that there aren't additional grant opportunities at the local level in certain communities, different counties, but there I would recommend looking at your local economic development organizations to see what might be available in your local community.
Thank you. Congresswoman, is there any legislation pending about loan forgiveness?
Yes, there is legislation that's pending, but probably the best way to look at it at this point is, as I said at the opening here, we passed the HEROES Act 104 days ago, and there are just really some wonderful components of that legislation, and I'm happy to go into detail if anybody wants that, although I really want to make sure that our volunteer CPAs and Bo and David also have, they're the stars of the show here. But, and the problem has been that when we sent that over to the Senate, the Senate Majority Leader made the statement that he wanted to put a pause, I mean, that was his words, on this. And here we are 100 days ago on Sunday. So we're 105 days. And here we are really still a little bit far apart on that. So, but yes, there is legislation that evolves around loan forgiveness, but but it is not passed, and nothing has passed the Senate either on this, unfortunately.
Can I count an employee as my full-time employee if they just stopped coming to work but have not quit and we have not fired them? Sometimes they come back 3 to 4 weeks later once they run out of money.
Kate, I think that's hitting on one of the FTE exceptions that's in the rules, and I would interpret that to be a voluntary reduction of hours by that employee. Now, of course, the importance there is going to be documenting that, be it some email or some other type of documentation explaining why the employee's hours have been reduced at the employee's own volition. And being able to document that, you'll be able to really have an add back to your computation to erase what would have been a reduction.
Yeah, and just to kind of amplify on that, there are the safe harbors, and then there's a number of exceptions, including, if you fire somebody for cause, if they resign, if they voluntarily request reduction in hours, as Daniel mentioned. So the key thing there is that you really need to make sure that you maintain your documentation on those to be able to validate if anyone asks, or if somebody wants to review your particular loan at some point in the future, like the Office of Inspector General or whoever. You want to have those records in place, whether it's your termination letter that you've sent to the employee or their resignation, those sorts of things. So documentation is key in this program, and I just encourage everybody to make sure you maintain that documentation, because in particular the FTE reduction can be one that's really impactful if you aren't able to address some of those FTE reductions in a meaningful way.
This one we touched on a bit earlier, but if we could just maybe have this stated more clearly. For PPP loan forgiveness, should I complete the form now, or would you recommend waiting for the simplified guidance for loans under $150,000?
Yeah, I think from my perspective, that's got to be you got to make that decision on your own based on your own individual circumstance and your discussions with whether it's your accounting partner or your lender, because every business case is unique. And as we've discussed, some of these safe harbors are dependent upon certain dates of when you submit your application for forgiveness, things like that. So I would closely review the guidance that's in the application and in the rules. I would discuss with any of your strategic partners that you work with to determine what the right time is for you to make application.
And Kate, if I could just add something to that also. Again, I'd encourage the small businesses to contact their lenders. I will say, and it's not scientific polling, but in all of the conversations that we've had with our members up to this point, I've really not encountered any situation where our members are saying that they're not getting a sufficient amount of information that they need to complete the forgiveness applications and process, or that the small businesses are having an incredibly difficult time generating and producing that information. But again, just to dovetail back to what Bo said, documentation in this, as in many other situations, is really important. And be absolutely positive as you can that you're following the rules so that you will get that promised forgiveness.
Thank you. We just have about 5 minutes left, so I'm going to ask 3 more questions that hopefully we can go through pretty quick here. Bo, would it be possible for you to provide resources or links for a bank's business customers who receive PPP loans? The bank would just like to be sure that they are eligible for loan forgiveness because they're following the right steps.
Sure. So the first thing I'd recommend, I already put it in there, was the SBA website, which is www.sba.gov/paycheck protection, which has all of the PPP information in one spot. So encourage you to go there. The applications, everything else will be on that site. Second recommendation would be to take advantage of the Illinois Small Business Development Center network that we support financially across the state. Those include SBDCs in Peoria, in Quad Cities, but these are folks that provide no-cost business counseling advising. They're very familiar with the PPP program and can help you as you look at applying for forgiveness. So that would be a second resource, and I'll put a link where you can access, you can find your nearest resource partner on that site.
Thank you. As an owner of a travel agency, we have had no income since March. The restrictions for traveling are still in place, which makes it impossible for us to make revenue. Will the PPP offer full forgiveness?
I'll just say, I think it goes back to the facts and circumstances of the business,
Right.
right? I mean, depending on how that business has been operating, if it's been keeping its employees, being able to utilize the costs, that's just going to have to, unfortunately, there's not a blanket answer you can provide there. It's facts and circumstances driven.
Okay, and then Congresswoman, we'll give you the last question and then let you close us out. Per the original PPP regulations, business owners are not allowed to have a second PPP loan. How does this impact the potential of a round 2 of PPP if that is made available?
Well, legislatively, I can tell you what the priorities are, at least on from the perspective of House Democrats. I just had the chair of the Small Business Committee, Nydia Velasquez, who is out of New York, on a call with us last week. And how she's entering negotiations on this is to say she wants to make sure that people applying for the first round of PPP are taken care of first. And then, so before being able to repeat, those applications for the first round will be taken care of first. So that's, again, all of that can be negotiated legislatively, but that as she enters those talks as the chair of the Small Business Committee in the U.S. House of Representatives, that's her approach to this. All right, Kate, we closing out then?
Yes.
Okay, so let me just first of all thank Dan Laughlin, who's the Managing Director, Specialty Tax Practice at FGMK of Chicago, Mike Bass, partner of RSM in Peoria, David Schroeder, the Senior VP of Federal Relations for the Community Banking Association of Illinois, and Bo Steiner, who has been with us repeatedly. So Bo, thanks for sticking with us, the Illinois State District Director at the Small Business Administration. We're grateful to all 4 of you. I do think it's worth noting Dan and Mike are volunteer for CPAs to help us on this call. The fact that they, you know, I don't even know what your hourly rate is. It's probably pretty expensive. So the fact that you've been willing to be on this call and offer your expertise really does mean a lot to us. And for all of those who dialed into this webinar, we hope it was helpful to you. If you have follow-up questions, I can't ask Dan and Mike to continue answering them, but if you do have follow-up questions, let us know. We are a phone call away, our congressional office, we're an email away, and we are always happy to do our best to answer your questions. We have legislative experts on our team who specialize in small business legislation, and we'll do our best to be of help. That's our job. You all are my bosses, those of you who called in, at least if you live in our congressional district. So with that, look, again, as I said at the outset, these are challenging times, and we want to do our best to be of help to you. Have a nice weekend ahead. Thanks, everybody, and we hope to be able to see everybody in the near future in person at some point. Thanks, everybody.